So it makes a lot of sense that the producer side will see the first downtick in inflation, and then it will be passed eventually on through the CPI to the consumer. So I think we're there. I think, and again, the chart on the dollar is hitting major resistance here. So I actually think that this is the pivot point, and I think it could trigger a Bitcoin bounce to 25.5, maybe 28. I think it could create a dollar bounce, a gold bounce, a silver bounce.
Hey guys, welcome to the Daily Crypto. In the past month, Bitcoin has dropped to $20,000, and our guest today made that call. As it turns out, it was spot on. But what happens next from here? How can the Federal Reserve correct the economy without breaking it? Will inflation fade away anytime soon? Keep watching to find out as we answer these questions with Chief Market Strategist of InTheMoneyStocks.com, Gareth Soloway. Most traders FOMO into or out of trades motivated purely by fear or greed. So with the Bitcoin drop from the highs of the past quarter of this year, did Gareth Soloway notice any emotional response from the trading community? What was the overall sentiment when it dropped to 20K? The Chief Financial Officer responds.
I think, so number one, the trading sentiment when it was at 68, 69,000 was just insane. I mean, it was at the level that, and again, this was early in my career, but the dot-com bubble back then, it was at the same level of hysteria where, I mean, you had numbers being thrown out there that were so ludicrous that it just was, I mean, as someone who comes from the stock market, you know, when you're talking about, oh, it's going to $1 million in like a month or two or whatever, it just doesn't make sense. So you see that, and then kind of when you get into the psychology of it, as you see things adjust, you're right. At Bitcoin sub 20, that's where people start to get nervous, right? Yeah. So once you got to 30, there were so many people that jumped on the bandwagon and said, oh, we're going to 20. But then when it got below 20, that's where people started to get nervous, and now we've seen it just recover just above 20. So I still think it's got more downside. I really do. If it's anything like the dot-coms, it's going to get worse before it gets better. But there are bouncing opportunities, right? So for instance, I'm long Bitcoin right now, still with a target of 25.5.
Really?
But I'm not going to hold it for, 70,000 or 60,000. It's a shorter term trade.
Does that mean Soloway thinks a rally will happen anytime soon?
There's so many other things. There's so many other things that the investing public need to recognize, like the dollar, right? The dollar plays a huge role in commodities and in Bitcoin. Bitcoin's kind of a commodity at this point. So the fact that the dollar's been ripping so dramatically higher has put pressure on it. And I think the dollar is going to pull back, and that should actually help Bitcoin.
The inflation, for instance, is extraordinarily high right now. The last time we saw this level was back in the 80s. Is Soloway surprised that it has gone to this level?
About a week ago, I was expecting it to kind of stall out, and it's still pushed up. I think it is down today, last I checked. But you're right, I was surprised at how extended it got. Mm-hmm. But it almost makes sense in a weird way, because these inflation numbers make the Fed, or make the investing public, think that the Fed has to raise rates more aggressively, yeah, which ultimately does pull money out of the system and strengthens the dollar. So as soon as we see a kind of a fade in inflation or a little downtick, the dollar should come in substantially.
A lot is going on right now, so they have to slow down. Interest rates are going up in Canada too. It has been raised by 100 basis points. So here comes the million-dollar question. When does Soloway think the fade will come in? When do traders and investors get that happy news?
And I know it's very counterintuitive, because we just got this ridiculous PPI print, we got the CPI print, and they were so high. But in the PPI print, you actually started to see, if you took out food and energy, a little bit of a downtick. It was slightly better than expected. And so even though the headline number was really nasty, I think 11.1%, there is signs that inflation is starting to stall. And I think all you have to do is like look at gasoline prices recently, copper prices, oil prices, lumber prices. They've all been collapsing. And remember how PPI works. So producers, that's the producer price index. So that's what their input costs are there, and then they pass those costs on to the consumer. So it makes a lot of sense that the producer side will see the first downtick in inflation, and then it will be passed eventually on through the CPI to the consumer. So I think we're there. I think, and again, the chart on the dollar is hitting major resistance here. So I actually think that this is the pivot point, and I think it could trigger a Bitcoin bounce to 25.5, maybe 28. I think it could create a dollar bounce, a gold bounce, a silver bounce, and even a stock market bounce here.
Gold turns out to be quite controversial in the crypto community, but it's important to ask, are we going to break 2,000 on gold? What is going to happen there with the precious metal? Gareth Soloway answers.
I'm still a huge bull on gold.
Yeah.
I mean, everywhere I look, it's, and again, gold is something that takes a long time to play out. I've been a little surprised at how big the dip has been in gold recently. But if you look at the dollar, it kind of makes sense how much the dollar has ripped up. But I do think that the gold chart is going to have a rebound as soon as the Fed takes their pressure off the interest rate hikes,
right,
and you start to see kind of the investing public and the institutions realize that we're heading towards a recession. How bad is the recession going to be? Will the Fed then have to reduce rates and maybe print money again? It just starts this big cycle again for the reasons to like gold as a protective asset.
Just like Canada with the 100 raising basis points for the interest rates, do you think the United States would follow anytime soon?
That's a good question. So we know that, I think it's a foregone conclusion that at least 75 basis point hike in the late July.
Yeah.
But there is now the question of, do they do 100? And the only reason, so in general, I think the Fed doesn't want to shock the markets.
Yeah.
But if they kind of start releasing a little bit of idea that they could do it, it is possible. And the reason it's possible is because there's not another meeting till September. So after July, it's September. And so they may look at that and say, okay, we want to do this because we're going to have 2 months to figure out if we need to do anything else after that.
Yeah.
And then also you're getting close to the midterm elections, and historically the Fed does not like to mess around with elections with a bunch of rate hikes. So, September, maybe they would do another one, but I certainly don't think October or November they would do it. So it's possible. 100 basis points is possible. I think it's a huge mistake. I think the Fed is at a point where they're trying to play catch up and get in front of something, and so they're going to overdo it, and then you're going to see a bad recession hit. And the problem with a bad recession is, like, if this was 5 years ago, they could just print money because inflation was 2 or sub 2%. But how do you get us out of a situation like that now? Even if inflation comes back to 5% or 4%, it's still well above their 2% mandate. So how do you then print trillions of dollars, and what do you see inflation go to then? So it is a tricky scenario where their hands are much more tied.
Not too long ago, it was announced that inflation is now at 9.1%. Does Soloway think that this is the real inflation rate? If not, what then is the unrealized inflation rate?
Oh my goodness. Yeah, so I think if you look at lower income, middle income people who are spending most of their money on rent, on food and energy, it's much, much higher, right?
Yeah.
But we know that when they factor in what the inflation rate is, they're taking into account, TVs and all these other things, right? That aren't necessarily the best gauge for lower and middle income families. So I think inflation is probably higher to the average American out there for sure.
Soloway continues, saying traders should put a little bit of their earnings in, probably every month, whoever has the ability to do just that. A lot of people in the crypto space, especially the Bitcoin community, think that Bitcoin will eventually get to $100,000 or $500,000. Does Soloway believe this to be true? He weighs in on this.
I think as it becomes more well adopted, and this is, again, the chain has to occur where it's regulation has to come in, positive regulation, and then this kind of more and more adoption by big players. Like, you need to see more of the Elon Musks, the Jack Dorseys, Mike Novogratz is a big one. I mean, these players have to continue, and you have to see more of them. And with that regulation, I do think you will see it. Now, it'll start small, but the beauty of Bitcoin is that, if you have 1,000 billionaires or 100 billionaires just buying small, it's a huge amount of money into Bitcoin. And then you add in more adoption in the global community just from retail investors, and it should easily see 500,000, in my opinion, especially if the printing of money restarts in the next major kind of recession, depression area.
So for people that want to get in and start trading, when is a good time to start? When is the right time to learn how to trade?
So bear markets are, I think we discussed this before too. It's like in bull markets, people think they're geniuses because everything goes up. So no one thinks that they need to learn. In bear markets, you lose all your money. So then it's like, oh, now I have to pay for education as well. And that's really expensive when I just lost all my money. But the bottom line is education is compounding your future profitability. And so you have to find quality people to follow that know what they're doing, that know the real keys to reading charts and to getting rid of that emotional edge and really focusing in on self-discipline and human psychology. I mean, human psychology is such an underrated part of trading and investing. But when you trade, you are trading humans. You're trading everyone else that's trading Bitcoin at this time. If you can understand them, you can actually use it to your advantage. So I think this is the perfect time in a bear market. Understand that you don't know everything. I don't even know everything at this point in my career.
One might wonder, did Soloway ever get into trading journaling? Soloway claims he definitely did that early in his career because it is such a great learning tool, even though it seems very tedious for a lot of traders because who wants to write down what they did wrong? But by doing it, you always ingrain into your memory a lot better and you tend to make fewer mistakes. People that do that do not make as many mistakes as those who do not. He continues, when a trader makes a bad trade, he says, they become upset with themselves and the market. But Soloway says when you learn to let that go, you just don't think about it again. So by reading over your mistakes and writing them down, you will likely avoid them much sooner.
And the bottom line is, as a trader, I think what's important is to get to profitability as soon as possible. We don't all have unlimited funds, right, to be able to lose and lose and lose. So you have to do things. If you're dedicated to trading, you have to focus on getting there as soon as possible and doing the right things to do that.
As a newbie, Soloway says paper trading is good for learning your platform, so you can learn the techniques. But the one thing paper trading doesn't do is trigger the emotion that real money does. That's the kicker, real money. Soloway concludes,
just to be clear, there's nothing in trading that's 100%, right? But it's about finding multiple factors in a chart that are telling you the same thing, like it's going to go up or down, and then reacting to it and understanding that these three factors give me an approximate 80% success rate chance. That's good enough for me, means 8 out of every 10 I'm going to win. That's Hall of Fame material right there, and going from there. And I'm going to reveal all my secrets, the confirmation signal that I use on a daily basis, the river theory, the things like time counts. I mean, all of this stuff that you can't find in any books that I use on a daily basis to make these calls and make these trades, it will be in there. So I'm excited. I mean, I think this is a great way for people to invest in themselves, which will then create this future destiny with so much more financial success than would have otherwise been possible.
Thanks for watching this video. What are your DCA positions for the next couple of weeks? Let us know in the comments section below. Don't forget to like, share, and subscribe to our YouTube channel. See you on the next one, and bye for now.